There are a lot of elements to discuss when it comes to your overall wealth plan, not only on the investment front, but also on the advanced planning. I am glad you're here because we have a lot to discuss when it comes to risk and the overall wealth plan. To start off, I want to go into the economic and stock market risks. First off, let me address the developments in the world that could potentially impact your investments. It really has been an eventful week, and it's really good to stay informed as to what is happening. Now, you may have heard about the US fighter jets launching an airstrike in eastern Syria in response to the attacks on the US base and the personnel that are in that region. Now, these events can raise concerns and create uncertainties, especially when it comes to the stock market as well. Now, I've said before, it is something that we are praying for the ceasefire and the stopping of this conflict. But it is also essential to acknowledge that the negative news that's coming out of the region has really dominated the headlines lately. And it's actually now overshadowing some of the positive economic news that we're starting to see. See, what has actually happened is that there's been some key economic indicators that have come out over the last week, namely the US GDP, our gross domestic product. It's a measure of the nation's economic activity, and it has shown a growth of 2.9% year over year. So, this is in line with our expectation, yes. But here's the really important thing to remember, that the GDP is backwards looking. So yes, it was great numbers, and the data included a lot of industrial production and manufacturing, especially when it was tied to the UAW strike. Now, this quarter was a significant inventory buildup of cars, and it contributed to growth of over 1.3% to our economy. Also, the government spending is another significant factor here in our economic growth. Over the past quarter, the government spending has increased by 8% and nearly $600 billion in deficit spending in just 1 month alone. Now, yes, this includes defense spending, especially for the wars that we're helping with Israel, as well as Ukraine. But the government spending is now the primary driver of our economic growth, and we've crossed over $2 trillion mark in deficit spending just this year alone. Now, you might be wondering here, how does this all affect your investments and the wealth management? Well, that's a great question, and I want to actually delve into that with, you guessed it, portfolio changes. Now, in this kind of part of it, we've really been emphasizing a lot of changes that have happened along the way to your portfolios and thoughts that we could have to help you maximize your investments. But we want to ensure you that over the course of the last couple weeks, we've had a really clear understanding of the options that are available to you, and we've really introduced some areas for you to consider in adjustments to your own portfolio. Now, there are several strategies that we have explored over the last couple weeks, but nothing has actually changed because of Israel and Hamas, or Ukraine, or even the GDP numbers. But here are a couple elements that you may want to consider. First of all, we've been talking a lot about diversification with short-term treasuries, and we recommended earlier to include short-term treasuries in your overall portfolio, specifically 1 to 3 month treasury bills. Now, they have proven to perform well, and they provide a lot of stability and liquidity. Now, this is crucial in really these uncertain times, and it's a strategy that can help balance risk and return. Now, also, we have been talking about extending these treasury holdings and expanding your holdings into a slightly longer time frame, approximately 1 month to 1 year. So this is another element for you to consider, and the diversification here really is a better risk management as well. Now, we've also talked about capitalizing on bond market trends, and exploring something called a steepener fund would actually take advantage of this. So what this does is helps to make the shifts in the bond market yields really pay off for you, because what it does then is particularly looks at the yield curve normalizing in response to all of these economic changes, and it can be a very good strategic move to really optimize your returns. Then the last element that we've been discussing are alternative investments. And this is really demystifying your portfolio with all the different elements of alternatives that can provide a hedge during economic uncertainties. Well, we can also be taking advantage of the potential gains that the market could have come year end. Now, like I said before, this is not a given, but with some of these alternatives that act as a hedge, they can also be growing when the times are good. And this approach can really offer some additional layers of protection and potential growth. So that's really kind of what we've been talking about. And I want to reiterate the fact that we definitely have those today, and those are still items to be considering even in spite of all of the hardships that are going on. Now, yes, it is essential to keep in mind that the investment decisions that you have should be aligned with your unique financial goals and risk tolerance. But together, we can actually evaluate your current situation and model a tailored portfolio strategy that fits your specific needs. So if that is something of interest, feel free to reach out. We would be happy to run the numbers and to make sure you're taken care of. That brings us to number 3, wealth management and advanced planning. We're going to delve into alternatives a little bit more as it pertains to the wealth management and advanced planning strategies that can help to secure and grow your assets. Now, some of you may know the game Pokemon, but I know all of you know of Picasso. So from Pokemon to Picasso, we're going to be exploring the ABCs of collecting and its potential impact on your financial future. Now, yes, it's not just a catchy phrase. It's really a representation of the vast world of collectibles that are out there. So we can build collections of treasured items that can be exciting and ones that can bring joy, but also prove to be a profitable venture as well. Now, you might be wondering, what and why would I want to start collecting? Now, the answer is simple. For fun and joy, yes, it can be a great hobby and bring immense personal enjoyment. But whether you're into fine art, vintage wines, sports memorabilia, sports cars, comic books, or vinyl records, the thrill of collecting can be a source of delight. And COVID-19 really had a significant impact on the collectibles market, with people having more time on their hands, growing their investment portfolios, and government stimulus payouts really helped to make some of these rare, in-demand items skyrocket. So soaring prices were witnessed in various areas, including art, wine, and even vintage stamps. So that's the exciting part of the collectibles market, and it actually still today remains very robust. And there are many different elements that we can be exploring as it comes to collectibles. So the different aspects here and the research firms that come about really can predict sales of global collectibles in general, and is really grown from over $400 billion to almost $700 billion just in the most recent couple years and going into the couple years into the future. So it does present some huge opportunities to really diversify your portfolio. Now, there's generally 3 motivations. It really comes back down to a lot of different areas with the collections and with risk management. Number 1 aspect, the collections can be fun and joyful. If your primary goal is personal enjoyment, you have the freedom to collect what brings you the happiness. And number 3 is the downside risk management. So yes, I know that there are many risks that are involved when collecting, but think about it another way. When I talked about just earlier with the diversification, there are ways that collecting just anything from wines all the way to different artwork to even some of those stamps can actually lower your risk. So whether you're collecting for fun or for profit, the market for unpredictable, valuable goods can actually be a bright spot for you. So use that as a thought process as you're going through collectibles and trying to add them in to your overall wealth plan. Number 4 is our second opinion service. Finally, I want to remind you about our second opinion service. If you ever feel uncertain about your wealth plan, please don't hesitate to reach out. We'll start a discovery meeting to assess your current situation, identify any gaps that exist, and provide one of 3 outcomes. First element could be that you're on track and no changes are needed. Well, maybe there are a few adjustments that could be used to really improve your overall plan, and ones that you could implement yourself. But maybe there's actually some significant gaps, and we'll give you some ideas on how to correct them. Now, we're here to help you navigate the complex world of finance, whether it's managing risk, optimizing your portfolio, stress testing your wealth plan, or providing just this, a second opinion. Our mission is to enhance your financial well-being and increase your overall probability of success. That is what being a guardian of wealth means to us. Take care.